right now.
Okay, good evening, everyone, and welcome to our webinar. This is so new, it's so fresh, we don't even have a name for this thing yet that we're doing here. But collectively, you have about, I was thinking about 70 years of experience with the people who will be speaking to you tonight. For those of you who know me, you know I've been in the business for many, many years and a specialist in hard money, also title insurance. And so we decided to put this together because we know most people are wondering what's happening. Most people in our real estate investor community are wondering what's going to happen in the next few months. Are we anticipating good things, bad things, rumblings? I heard somebody describe what's happened with this COVID-19 situation as we heard the blast, but we haven't had the full impact yet of the bomb, so to speak. So we think that is going to be something actually that is going to be helpful to us as real estate investors. And because there's going to be a lot of things happening in the real estate community. We think a lot of discounted properties, people are going to have to be able to make moves. And so as a real estate community, we want to be there to be able to help them with their situation. And hopefully, you know, we can make money as well. So without further ado, let me introduce everybody. You guys know me because I invited about 60 people to this Zoom call, 30 years in the business, and you know how to contact me and so on. Next, we have Max Chera from Express Capital Financing. Express Capital and I have closed a number of loans. I find them to be a very aggressive lender, and they are one of my go-to people when I have a loan that might fit their criteria. So Max, why don't you tell us a little bit about Express Capital Financing, your scope of, where you lend and all that kind of thing.
Absolutely, I'd be happy to. Thank you so much, Kevin, for the intro and for being here with us. We definitely appreciate it. And yes, we definitely have a great relationship, closed a number of loans together. So Express Capital Financing, we are a nationwide direct lender for investors in real estate. So whether you're looking to do a fix and flip, we do hard money. We have hard money programs. Prior to COVID, we did anything from a single family up to mixed use, commercial, it didn't matter. We also have 30-year mortgage programs for when you're looking to refinance out of your hard money deal, or whether you have a property that you're trying to leverage and help you use that cash and put it into other properties as well. So we have a wide variety of programs, whether it's a permanent financing, hard money, but really what separates us is what we try to do is take the consultative approach. Our goals are aligned with our investors. You know, as a lender, our goals are aligned. We want everyone to be profitable. We want everyone to come out of the deal okay, because when the deal is successful, we are the only two people waiting to get paid. Everybody, the realtor, the title company, the lawyers, everybody got paid from day one. It's the lender and the investor that got to wait for the profits to show. So we try to make sure that we're assisting on every level, whether it's going through the actual numbers, making sure the deal makes sense, or whether you're an experienced investor and you've done this for a number of years, then you don't need help with the numbers anymore. Now you need to make sure that you're not over leveraging yourself and being cautious, and especially in a market like we're in today. So that's pretty much, what we try to do. We try to go through everything together and help leverage.
And I can attest to that because, as I said, I've closed loans. And by the way, you guys, both of you, look like you've had haircuts, and I'm over here with a beard and the long hair and looking a mess. And you guys, somehow, you guys got haircuts.
You got to do it yourself.
I'm not going to ask. I'm not going to ask. All right, next up, we have Peter Uzzolino, one of the all-time pros in the title insurance business, been around for a very long time. I think you said 45 years the other day, Peter, right? Something like that, right?
40, only 40.
And I'm associated with Acres Title now. We're doing a lot of title insurance work, not only for retail buyers, but also for the real estate investor community. And we hope to continue that. So Peter, why don't you tell us a little bit about yourself and Acres Title and so on. And then later on, you'll come back and tell us what the investors have to be cautious of moving forward as it relates to title and investment properties.
Okay.
So go ahead.
Hi, I'm Peter Uzzolino. Thanks for the intro, Kevin.
You're welcome.
Just to say, Kevin is one of my top salespeople. He does a great job for us. He knows how to communicate with people. He knows how to get the job done. And I thank you for that, Kevin, every day.
You're welcome.
Just to tell you a little bit about me. I've been doing this for 40 years. It's myself, my older son, Peter, my younger son, Tony. So it's a family business that has grown tremendously. We have 165 employees working for us. And with the COVID-19, thanks to my great IT department, 95% of my workforce is working from home, and just essential people that have to be in the building are coming in. So we have not, it has not stopped us from doing business at all. However, we are doing business a little bit differently now, like a lot of companies. And my father always said to me, sometimes when you have something really bad happen, you may get some good out of it. And we've all learned to be much more efficient with our time, with our closings, where sometimes closings would take an hour and a half to 2 hours. We're getting people in and out of closings within a half an hour because we're preparing them better. And you should see like tomorrow's Friday. Tomorrow we have 36 closings going on.
Friday before a long weekend.
Friday before a long weekend. And I have to say 20 of them will be done in people's cars. We'll have a lineup like a Chick-fil-A drive-through.
Wow.
And the people love it because they don't want to get out of the car. They want to be safe.
With that?
Right. They want to be safe. So we'll do whatever it takes to get the deal done and get the deal closed, whether we're going driving to someone's driveway or wherever we need to go to make sure the people are safe and make sure my employees are safe. We get the job done. So we've had a lot of experience with commercial real estate, residential real estate, short sales. I became a maven in foreclosures because my next door neighbor, when I lived in Springfield, New Jersey, was Lenny Zucker, and he wrote the foreclosure book. So we spent many a day on my deck going through foreclosure problems with properties. So we have a great expertise in every avenue of a real estate closing. We're also the #1 title agent in the state of New Jersey, and we're 13th nationwide for title insurance.
Wow.
So
Impressive.
I'll leave that there with you, Kevin. Then we'll come back and tell you how we do what we do.
Okay, cool. Thank you for that. And just today, right, Peter, we had a situation where, sometimes things take a little bit longer, but still you came through, and we had what was it, 350 pages of a search, of a title search. My God, 350 pages. Because why? Because the guy had a common last name, Smith. Can it be
And
any
a first
more
name.
common?
Right.
Yeah, and a common first name too. Like John Smith. I mean, it was that simple. My God. But these are things you go on in the business, right? You have to deal with it, right?
Without a doubt. Without a doubt.
All right. So real estate investors want to know, Max, a couple of things. They want to know, like, where is the market now? Where do you think it is now? What's happening now? And then move us, let's say, 6 months from now.
Okay. And Kevin, that's a great question. Really what it comes down to is which market you're in. Because what we're seeing from our point of view is that every market is actually reacting very differently. Some markets such as, and so we're nationwide, so I get to see things from Texas to Florida to New York. So for example, Texas, I don't think really anything has changed there much. Their prices, they're still going for market value. They're not going up. They're not really going down. So it's pretty consistent. And, that's normally what Texas is known for as well. But then you have some markets like New York. New York actually has seen, some, we were always having an issue with people leaving New York, not because of anything, but because it's an expensive place to live. So you always have, where it's outgrowing people and there's people moving out. But right now what's happening and what we're seeing is that a lot of people are actually taking this time to relocate themselves. So for example, let's take New Jersey. New Jersey prices are going up. I mean, I was actually looking at a property that was going into a bidding war that was going above asking price.
Yep, that's happening.
Yeah, so it's real interesting to see because it's really depending on where people are going, what they're doing with it. If they do leave New York, where are they going to go? If someone is going to move from somewhere, they're obviously taking that home somewhere else. So somewhere else is going to go up with all of this. So being careful, looking at what's happening and taking real comps into consideration. 2 months ago, we had nothing to look at and everything was just a projection. Now, even though there aren't that many sales and deals flowing, there's still what to look at to see how the markets have reacted. And paying attention to that is really going to be your best key indicator to, hey, am I in a situation where I have to give a lower offer because I think my value is going to go down? Or, hey, am I in a market where prices are seeming to stay the same or if anything go up and I should be okay if I use the same ARV that I had before? So that, I would say, is pretty much the biggest indicator and something that someone should look at. It never changes. Comps is always your best bet because it's what's actually happening. Now, to answer your second part of your question, 6 months from now, what's going to happen? I wish I had a crystal ball. I don't. My head might be shiny, but it's not that shiny. But what I believe is going to happen is that there is going to be a lot of opportunity in the market. You mentioned, I think it was Peter or yourself that mentioned it, that, hey, when something bad happens, hopefully we could at least find a way to benefit from it. And that's what we're going to be looking at. There's a lot of things going around. People are, unfortunately losing family members, and if that's a parent and, maybe the kids inherited a property that they don't need, or maybe they don't want to manage it. So they might just want to cash out on it and take that money and use it for their family or invest it in something that they do know. Right. You have, examples of people that just, unfortunately, if they passed or divorces or maybe they have a mortgage that they're not going to be able to handle the deferred payments on where it balloons up. So there's going to be a lot of situations where it's going to really change people's thoughts. People are going to start thinking about, hey, am I in the right situation for myself? Do I need to move? Do I need to downgrade? And that, I believe, is going to leave a lot of opportunity in the market for us investors, whether you do fix and flips, and there's going to be a lot of people that, were essential, haven't had many issues. They're going to be looking to buy because they know, hey, when's the best time for me to buy? When prices are low. And they're assuming that prices are going to be low. So I'm getting calls every day from people, even though they're not investors, they're just looking to buy for themselves. They're trying to understand what they got to do to get prepared for that. So there's going to be a lot of movement in the market from what I see. And what it comes down to really is how people react to what, once the market kind of stabilizes itself, opens up, and people start going back to work.
So if you had a real estate investor that came to you with a seemingly good deal, you're open to fund it?
Absolutely. Absolutely.
Has anything changed than 6 months ago in terms of your pricing and all that kind of thing? What's changed in that area?
Absolutely. And that's a great question too. So, there definitely has been adjustments. Right now with everything going on, there is obviously more risk in the market, which is why some people may have chosen not to even invest. And that's up to them on their own. A lot of us are, investors see this as an opportunity, which is why we're jumping on it. I, as a lender, see this as an opportunity, which is also why we want to make sure that we're there for our investors, because we know, hey, the time to buy is now. If it's not now already, it's in a few weeks from now when things kind of start moving in. But I'm seeing deals come in every single day. I'm getting calls. People are going on auction.com, finding properties that they don't have to go and set up an appointment with the seller. They can just go into a vacant property. They're finding creative ways to really build these deals and make them happen.
Are you getting a lot of business from New Jersey since Peter and I are both based in New Jersey? Is that a good part of your business?
Yeah, I would say so. I would say majority of my deals, at least today, I was working on were New Jersey.
Okay, so somebody comes to you and says, Kevin, Max, I could buy a property for $200,000. It needs $60,000 worth of work, but the ARV is $375,000. What kind of pricing would you give somebody on that kind of deal? All things being equal.
Sure. So, just overall, again, not breaking down the numbers so detailed because, I don't have my calculator and everything in front of me. It seems like that deal would have, a decent amount of profit on that we would like to see. What it comes down to really would be the investor, like, hey, is this your first time around? Like, are you new to this, or is this your hobby, which you do every day, where now looking at these comps makes sense to you and you understand it, And even if you are a newbie, we're okay with that because again, we're verifying everything with you. You know, we're in this together. We're getting an appraisal to make sure the values make sense. We're going through the scope of work to make sure that you're not putting anything crazy into the property that's not going to bring you value back. So we treat this as a partnership. So we would still fund them. I would say, you know, we would give about 80% of the purchase price, 100% of the renovation, which is right now our maximum leverages. And, you know, rates are going to be anywhere between 10 and 12%. Points would be 2+, depending on, you know, experience level and what you're capable of.
Okay, and so you think you're going to be getting more opportunities in the next few months, or less, or commercial, or what? Because you do commercial as well, right?
We do commercial. So right now we're only doing commercial for our permanent products. We're not doing hard money for that. And I think that'll open up soon as well. What I'm seeing now, at least in the last 2 weeks, is that there's been a lot of good news in the lending industry. A lot of investors are coming back into the field. A lot of the secondary market is coming back in, and Goldman Sachs started buying notes again. So there's all
Wow.
good news. And now it's just about, hey, how soon is this going to really go back to where we were? That's the $1 million question.
Right. Okay. All right, great. Thank you so much, Max. And we'll come back to you. But by the way, everyone who's listening, we're going to come back later for Q&A. So sit tight. I know you got a lot of questions, and we'll get to those as soon as we can. But next up, I want to ask Peter Uzzolino to give us some insight into the market, what he's seeing, and then tell us a little bit about what real estate investors should be cautious of moving forward.
Well, the very first thing I would be extremely cautious of, which is hitting the market at an unbelievable rate, is cyber fraud.
Wow.
This is very, very, very dangerous. So for all the people on the call, if you're in the process of purchasing a property and you're under contract to sell, there are guys out there that are phishing the emails.
Yep.
And they're trying to get involved in your transaction. Just today, one of my attorneys called me today, and she was on the sale end of a deal. And she said, Peter, you're not going to believe what happened. The buyer got an email from, he thought it was his attorney to wire funds.
Oh.
And he did wire the funds. It was $250,000.
Oh my God.
The money went. They're trying to stop it, but I'm pretty sure it's gone already. So please, if anyone out there is buying property, you will get notices from your attorney, from your real estate agent. No one's going to send you an email to wire funds.
Oh, God.
No one. And if you do get one, the first person you should be calling is your attorney. And if you do not have an attorney, call your real estate agent. If you don't have a real estate agent, if you have a settlement company like mine, call us before you wire anything. Because these people are out there, they're stealing money like crazy. And with all the stuff with COVID right now, they are feasting. I'll give you an example. Tomorrow is a very hectic day. It's before a holiday. This is when they come out because they know everyone is rushing because everybody wants to try to leave early, and things happen when you rush. So please, never wire money unless you speak to your attorney, your realtor, your settlement company before you do any of that. That's the biggest problem going on right now, is hackers stealing money from real estate closings.
Right.
And unfortunately, a lot of these people have free email. When you have free email, the security is not as good as the encrypted email. And that's how they get involved. So be careful out there. Be very, very careful.
I get emails from people all the time, not real estate investors, but like guys who claim to be lenders, and they have a Gmail email. And I'm like, yeah, no, you're not a lender.
And unfortunately today, the person had an AOL account.
Oh, gosh.
I didn't know anybody still had AOL accounts.
That's right.
You know?
Exactly.
But it's a shame. But for the people on the call that are investors, my suggestion to you is form a relationship with a title insurance agent. Form a relationship with someone like Kevin, who's out in sales doing work, because we're the people that could help you with these transactions. And what I do for most of my investors, when they find a property that they want to buy, they'll call me and say, Pete, can you run a quick search for us? Like I just did for Kevin.
Yep.
Normally, we can get these searches back in 2 to 3 days. Until the courthouse is open, it takes a little bit longer because we have to do it online. And there's some counties that are really good online, and there's some counties that are really bad online. But by doing that, you find out who owns the property. You find out how many mortgages are on the property. You can find out how many judgments are on the property, federal tax liens. And the greatest thing about this, you're not violating anyone's privacy because this is all public record. So if you see a really good deal on a piece of property, we run a search. You find out they got 3, 4 mortgages. They have federal tax liens, judgments. It may not be just a straight deal. It may be a short sale. Or they could be in foreclosure. There could be a list pendants on the mortgage and the people are in foreclosure. So it's a good way for you to understand what's going on with that property, and it will help you negotiate with that seller.
Yep.
I do this a lot for real estate agents because I can't tell you how many times they take a listing from the person who doesn't own the property. You know, he may have a power of attorney.
That happens.
You just don't know. There may be a divorce going on. I have to tell you, we're doing a lot of refinance work right now. And the majority of the refinances is because people are getting divorced and one party's buying out the other party.
Oh my God. Wow. Pete, you know what else? A lot of times, what I've seen over the years, I should say, is a real estate investor will come to me and say, yeah, I'm going to buy this property for $300,000. They tell me there's only a $80,000 first and a $20,000 second. And I go, oh, that sounds great. You know, you got a lot of built-in equity, right? And then you go to do the title search, you see tax liens,
right,
other liens, you know, oh my God. And then there's an argument. Oh, my husband never told me about that. You know, you get into those things too. So,
well, you know, the funny thing about that, Kevin, most people who go to the bank and get a home equity loan don't even realize it's a mortgage. They think it's just a checking account with money that they can use.
That's right, exactly.
You know,
right.
And then they go to close and they go,
oh yeah, that thing.
last week we were doing a refinance for a piece of property. Husband and wife owned it, but they were divorced already. And they were divorced for years. And the ladies wants to refinance. I'm going, where's your husband? We don't need him. I divorced him.
Oh,
I said, yeah, but he's still on the deed. Nobody did a deed taking him out of title. You have to go. We don't talk. He's not going to help me.
Oh my God.
So we run into all this kind of stuff.
You've seen it all. Wow.
Seen it all. Absolutely.
Max, let's go back to you for a minute. If a real estate investor has a deal for you, how do you want to see that deal presented to you? What do you want to see?
I want to see that they've done their homework. I want to know that they've spoken to a realtor to a certain extent, got some comps, and know that their after repair value is based off of something substantial. Nothing just like, oh, well, you know, I went on Zillow and I saw that, you know, a house there sold for $350, so I'm going to sell for $350, and when nothing else sold above $250, and, you know, there was something special about it. So, you know, I want to know that you've done your homework, you've actually looked into it, and you're not just, you know, looking to throw your money in real estate without actually knowing what's going on. So I would say really it's mostly about, you know, showing me that you've at least done something to it. That's going to make sure that I, you know, give it the most attention.
And how about in terms of paperwork? What do you want to see? You have an app or something, right?
Yeah, so we have an online application actually that's super easy to use. It's not anything complicated. It's a matter of a bunch of fields that get filled out. So we want to know what the purchase price is, the after repair value, what your rehab budget looks like, how many deals you've done before, a little bit about yourself that'll be on there. And with all that information, really, it's everything we have to price out a deal. What we do is, we build this relationship on trust. So we kind of say, hey, just tell me what I'm going to see when I look at the documents, so that I can give you a quote and tell you exactly what's going to happen. And then we go through everything and collect it. Now, our document list is very short. It's not a lot of stuff. It's actually very easy. Probably one of the easiest loans to get out there besides a merchant cash advance. So we would need entity documents, just knowing that you have a corporation that exists, that's allowed to legally do business. We want to see the purchase contract out so we can work with title, the scope of work, so that we could give that to the appraiser, get a good value for what the property will be like afterwards. We'll ask for a bank statement just to know that you have the funds to close. Now, obviously, working with investors, that could get a little bit complicated because sometimes their money's coming from a sale that they have that's closing tomorrow. So we accept that. These are just guidelines of what we want to see. And then everything from there, as long as it makes sense. We're very common sense based. So if you're selling a property and that money is going from one place to the next, I don't have to see it in the bank account.
Max, you mentioned the paperwork. So where would they get the paperwork on the deal to fill out for you guys?
They could reach out to me and I'd be happy to send it over. We also have it, all of our documents uploaded on our website, expresscapitalfinancing.com. There's a little forms area where you could find a template you could use for your scope of work. So there's a lot of things on there that they could use that I don't even need, whether it be a walkthrough checklist of what things just to check when you're walking through a home, a scope of work, even if they're not planning on submitting it to us, if they're doing the deal cash and they just want to have something to hold the contractor accountable, feel free to use it. We have our track record template on there. That I would hope that every investor actually keeps some kind of Excel sheet about their deals. That's definitely going to help them in the long run when dealing with any lender. So definitely keep track of what you've done and how you've done it. Show your success. Show us what you've done.
I tell every investor to do that. Make sure you build a bio of yourself.
Absolutely.
Really, all right.
Absolutely.
Let me, Max, one more question. Then I want to jump back to Peter for a minute. And
yeah.
You're funding nationwide, basically?
We're funding nationwide. There's about 4 states that we're not in right now. The 2 Dakotas, Nevada, and I keep forgetting the 4th one. I think it's like Vermont, to be honest. Yeah. We're nationwide. So any city, any state, we're ready.
Your minimum loan is how much?
$75,000.
And max?
Right now for COVID, we're at 1.5. Yeah, we take everything to the max.
Take everything to the max.
I like that.
Peter, I want to jump back to you for a minute. There was an important question I forgot to ask you. Is Acres only doing New Jersey in terms of title?
Acres is only licensed in the state of New Jersey. I have one client that does car dealerships all over the country. And what we do is we send that work out on a referral basis. So I have a lot of referral basis, but on referral, it only can be commercial. Only commercial. And we do there's a lot of car dealerships we're doing in New York, and it works out pretty well for us.
Okay, good. So. All right, so it's 7:30 just about, so I don't want to belabor this for not only us, but also for our attendees tonight. So I think at this point we should open it up to Q&A. So if anybody has any questions, what is that?
What did I win?
What the heck happened here? Yeah, the wind was blowing strong, right? All right, guys. So Q&A. Who's got some questions? Paula's here. She'll take care of that. I don't know what the heck's. There she goes. All right. Q&A. Who's got questions for us? Hello? Anybody there? Can't hear you.
Yeah. Well, just so you guys know, if anyone has any questions, feel free to put it in the chat. If you want to vocalize it, you could raise your hand. It looks like actually we got 2 people that raised their hands.
What?
What's the code? There's smoke and the thing went off.
8785.
No, it isn't.
So 1031 or 611.
Okay.
Yeah, she's cooking, My wife, the cook. Let's stay a real estate agent. Oh, gosh, great.
I
Yeah.
got you, man. Hey, it's all good. We're all working from home now.
That's what
But
happens. Yeah.
we got Eric who raised his hand, so I'm going to allow him to speak for a bit and ask his question.
Okay, sure. Eric, go ahead. Go
Eric,
ahead,
you
Eric.
there?
You have to unmute yourself. Max, can you unmute him? Oh, there
I
you
just
go.
did.
There you go. Go ahead, Eric.
Hi, how you doing? My question is, do they do new developments, meaning funding and new projects?
I'm sorry, could you say that again?
Yeah, say it again, please.
Do you do new loans and new developments?
Like land up, you mean? Like ground up?
Okay, for example, I'm a green builder. We are green developers. So if we have land, do they do loans and new developments, meaning grant
New
up?
construction.
New
Correct.
construction, everything. Yeah.
Right. So right now we actually just opened up our new construction program. So we're actually funding up to 50% of the construction and the purchase price, or 55% of the ARV, whichever of the two numbers is lower. So the leverage is a little bit lower than it was originally, obviously. The good news is that we are offering deferred payments on them, and rates are anywhere between 5 and 8%. So it's a great deal as far as the pricing is concerned. Again, we are trying to at least give something out on the market that we could offer. So, you know, we definitely
Let's
have
say
that.
if we have an asset that could be close collateralized to do the borrowing on the project. Let's say we have an asset for 2 million and we want to utilize the asset that it's free and clear. Would you guys do that? And what type of asset will you be utilizing, if it's commercial or if it's residential?
Sure. So that's a great question. So we won't cross collateralize on the actual deal itself, but we have programs that will allow you to leverage those properties and use that cash to use for your next investments. So for example, you could take on my permanent financing if it's something that you wanted to keep for a long period of time, and leverage that property, take the cash out and use that cash for your next investment. We also offer portfolio programs. So if you have more than one asset that you wanted to leverage for a deal, you know, that's absolutely fine as well. But I can't cross collateralize on the same loan.
All right.
Does that answer your question?
Yes. What loan, time of loan and the loan would be? Are you laying a 1 year term loan or 2 year term loan? And what would it be the exit? Because I could provide myself with the exit. I would like to know what frame of timing are you guys looking to return on your money after
Sure.
the ARV repairs are done?
Sure. So right now we are offering 12-month terms on all of our short-term products. Now, all of our products also have a free 3-month extension on it. So we're not so much into, hey, it's, you know, 12 months, I need my money today or your legs go. It doesn't work that way with us. We're more, hey, what's going on? Talk to us. Oh, you need an extra 3 months. You just finished a product. You got to throw it on the market. No problem. That's okay. Now, if it goes beyond those first 3 months, we're still going to work with you. There will be a 1% extension fee, but we could definitely extend it an additional 3 months after that.
Okay, so on the rate, or let's say on the interest, this interest will be paid at the end of the construction, or it will be paid on monthly payments, or we will use interest reserve on the borrowing part?
So I'm going to answer that in 2 separate answers. So the first part is, yes, you are paying the interest on this loan at the end of the deal. So once you sell the property, you will have a payoff that includes the principal plus the interest, because you have made no interest payments up until then. And that's only for my new construction program. If you're doing rehab, it is interest only. Now, for the second part of your question, you asked about interest reserves, which is actually something that I should have touched on today, because it's a really big part, especially in this whole pandemic that we're going through. So we want to make sure that you have enough funds to hold the property for at least 6 months. Because again, from before, when all these guidelines were kind of changed, no one knew when the markets are going to open back up. No one knows when you're going to be able to throw your properties back on the market. So we want to make sure that you could hold the property for 6 months. So as an investor, you should want to have that as well. because you never want to be in a situation where you can't make a payment and you know, your property is not on the market yet, or you know, anything like that. But
do you guys consider doing a JV project if it would be something that you guys will entertain?
so we will entertain a JV deals. We usually do want to have some sort of relationship prior where we've done some deals together. If you have a really strong track record and you think that you would qualify right off the bat, you know, we'd be happy to look at it and see what we could do. But Eric, I love your questions. They're all really awesome. We just got a few more questions and I want to give some time for other questions if that's okay. But if you have anything else
No
in the
problem.
future, just give me a call. I'll send out all my contact information and we'll make sure we go through it in detail so that you know exactly what we can do.
Definitely. Thank you so much for your time.
Thanks,
Thank
Eric.
you so much.
Okay,
So
next,
let's
who's
get-
next? Go ahead.
So we got another Kenneth Phelps. I'm gonna let him do right now. Let's let you talk, and let me unmute you.
Nope, still muted.
Well, it takes a second to kick in.
Oh. You sure it's still muted?
I'm clicking.
All right. Okay, Ken. Oh, you had it there for a sec. Kenneth, try to unmute yourself. Maybe you're muted on your side.
Oh, there we go. Ken, do you hear it? Can you speak?
Hello, Kenneth. Are you there? Hello, Earth to Kenneth. Hello. Are you there, Kenneth?
All right, let's see if we have anyone else that raised their hand.
Let's try to move
We
on.
have something in the Q&A question. Let's see what this one. So Sam Lev asked, when going to an auction and need lien info on a lot of properties, how would it go with the fee for title search? So that's for you, Peter. Let me know if you need me to repeat that.
Yeah, no, it's okay. So if you're going to an auction property, it's going to go, if we're talking about a sheriff's auction on a foreclosure, we can run a quick search for you. It'll cost $150 if you're the successful bidder. Then we do a full-blown search, and you'll get that $150 credited back to you. So with title insurance, the price is regulated by the state of New Jersey Department of Insurance, and it depends on the purchase price. So whatever you get the bid at, that's what the premium will be based off of.
Right. And Peter, if someone needs what you just talked about, they can contact me, right?
Right.
And tell me what they
Absolutely.
need. Give me an address, give me the contract, anything else that they should know they have to get to the title agent?
With the COVID pandemic, the best thing to be able to get, if it's an actual purchase, we need the contract of sale. We would like to see if they have a copy of the title insurance policy that the seller received when he purchased. It's very important today because with searching online in all of the counties, they all basically go back 20 to 25 years. So in order to find easements and restrictions, you got to go back a little further. So if they have a copy of their title insurance policy, that will give me the information I need. If there's easements, restrictions, if they can get a copy of the old survey, that always helps. So that's the information I need. You know, if it's just a basic search, all I need is the address, block and lot, owner, and we can run a search off of that. Okay?
Okay, very good.
Awesome.
Excellent.
We
And-
got to, go ahead.
And I was just going to say, and the stuff that Peter just said, that is information as a real estate investor they should be getting anyway. They should have that at their fingertips. Get it
Absolutely.
from the seller, or even the real estate agent could look a lot of that stuff up for you. You want to make it as easy and seamless as possible when dealing with like me, Max, and so on. So just have to be, get your paperwork together. Go ahead, Max.
Absolutely. So we got another question from Dennis. It looks like this one's from me. So how can I get hard money and then hold the property? So actually that is the Burr strategy. No, I don't remember who created it. Somebody did, and
The
everyone.
Burr,
started using it.
wait. Tell them what that is. Burr, the Burr
Yeah.
strategy. B-R-R-R, I think another R, right?
I think so.
Buy,
So it's buy,
renovate,
rehab,
Rehab.
buy, rehab, refinance, rent, refinance. I don't know if there's another one.
Yeah, so like 3R, yeah.
That's about it.
So
So-
B, 3Rs, yeah.
Right. So pretty much what you're doing is the following. You're buying the property through hard money. So you're getting great leverage, you're getting rehab dollars for the property, and then you're increasing the value, right? So now when you're done with the rehabs and now you're rent ready, you have a renter in there and you have income coming in. Now you're saying, hey, I want to get a 30-year mortgage to pay off my hard money lender so that I could keep this property. So what you're doing is you converted an asset that was not lendable by either a traditional bank or traditional lending, and now you got it rent ready where it's now stabilized, and now someone will come ahead and look at it and say, oh wow, this is a great product. I would give you a loan for 5 or 6% or
Take the equity
that
out.
range. Exactly. So what you're doing is again, it gets a little bit tricky. It's not as simple as that. There are some, the details are in the numbers. So, you could always go through a deal. You always want to make sure that you have enough equity in the deal by the time you're done so that you could pay off the mortgage with the refinance and not have to pull money out of your pocket. Is that going to be every single deal? Probably not. You see some of them now where people are having just to bring a little bit more to closing, especially now with, leverages that have dropped. But hopefully as soon as it all comes back, it should be a lot easier to do.
Okay, good. Good question. Anybody else? Questions? It's 7:42. We don't have a timer on here, do we? Like you only have a 45 minutes or something on Zoom? You don't have that, right?
No,
You
we're
have
allowed
access-
to.
yeah.
Yeah, we could go as long as we want, but I just don't want everyone here to hate us for going on for too long.
Right. No. And Peter looks like he's still in the office. He's got to get home already. It's enough already.
Well, someone said we should go rob Kevin's house, so I'm in.
Yeah, who the hell? Who's that? Well, come have dinner. It's probably burnt though, but.
Oh, Lord, it's too funny.
Okay, so we have one more question from Sam. What's this? Are there new low closing costs when switching hard money to a long-term loan with Express? Okay, that's your question, Max.
Absolutely. It's a great question. So yes, there are new closing costs. You are originating a whole nother loan. So there would be, you would need to go through the process again. Obviously, as a repeat client, we're going to make sure that we're saving you as much money as possible. Maybe we could lower points, one way or another, maybe on the purchase or the refi. So that's definitely something that's possible.
How about a new appraisal? Would they need to do a new appraisal?
Would they need to do a new appraisal? It depends on how quickly they've done the work, to be very honest.
That's right. Yes, correct.
So if
it's been 6 months or less, maybe you won't have to, but over
Exactly.
that, yeah. So maybe you could save some money there,
Absolutely.
You also want to make sure that if you're doing a refinance, you make sure with your title insurance, you want to make sure you're getting the refinance rate, which will save you money as well. You do not want to pay standard rate. That will cost you too much. So you want to make sure that title agent is giving you the refinance rate, so you're getting the discounted rate on a refinance.
Oh, so they came to us once to do the title work originally. They're going to come back again.
Right.
And okay, so cool. Yeah, they're going to get a discount. Cool.
Yeah. You know what else I'm seeing a lot of right now, where people are purchasing and they're paying cash, and then they're refinancing. And then they get upset because now they have to buy a new policy for the mortgage. So what I do with those type of people, if they can get that mortgage refinanced within a 30-day period, we don't charge them for the mortgage policy.
Right.
We just charge them to do another closing, and we make it like a simultaneous issue policy, so they save some money.
Gotcha. Okay, good. All right.
Right.
All right. Anybody else? Let's see. The R. Yeah. Okay.
Yeah. So Ron told us what the last R is. It's repeat, the most important one of all.
That's right. The R is so there are 4 R's. So let's run it again. It's buy,
Rehab,
go ahead,
rent, refinance, repeat.
repeat.
Why is the repeat though so important? If you ask me, it's because you're not supposed to get rich off of one deal. That's not
right.
what we're in this for.
Yeah.
We're in this to make a consistent living and a pipeline that's going to come in, and you're going to have things going out at all times. So there's cash flow, and eventually you will have a portfolio that will get you rich.
That's right. That's thanks to courtesy of my personal CPA, Ron Jankowitz. Thank you.
And your CPA extraordinaire.
CPA extraordinaire. Right. So what is this? So do you have a job? have a job to show salary? Oh, so
No,
you,
yeah.
go ahead.
Let's ask
Max.
the question again. I'm sorry. So
Yeah,
he said, so you don't have to have a job to show salary. And the answer is no. When you go to a bank for a loan for a property, they want to see that you have income to support that loan. When you're coming to us, you're saying, hey, Max, I want to create an income doing this. So we understand where the income is coming from. It's coming from the actual property itself. So this is an asset-based loan. Asset-based loans exist on the hard money as well as the mortgages. So we're offering pretty much we're going to look at the debt service of the property. Hey, how much do you have coming in rent? What's your principal? What's your interest? What's your taxes? What's your insurance cost? And now, does that rent cover that? If you cover it and there's no issue, well, then guess what? You just found yourself a cash cow, because it's just going to go in there. They're going to make their payments, and that's going to go towards your equity. And now you're all set.
right. And then what if you're a 1099 employee? What if you're a, you already have a lot of money. Maybe you don't have a regular W-2 job. How are you going to show it, right? So.
Right, exactly. So here's, this is the fix for that. If you don't have a W-2, you don't have a job, or anything like that. But, most of us in real estate don't have jobs. I say every day that we are the ones that are looking for jobs every single day.
Yep.
Whether you're a realtor, whether you're a lender, whether you're a title rep, we're looking for somebody to hire us every single day.
Yep.
So
Sure.
welcome to the jobless life.
Okay. All right. Well, look, that's almost a little over 45 minutes. So I think we've answered enough questions. And if people want, we'll do it again.
Absolutely. Hey, if you need us, we're here. Please reach out. Go ahead.
So, Max, the website for Express Capital is?
expresscapitalfinancing.com.
Okay. And Peter, we don't really have a website, but if somebody wants title work, they contact me, just email me. Most of you know me. If you don't, look me up, the Kevin Clark, all 6'4" of them, and you'll find me. So until next time, everyone. First, let me thank you, Max. Let me thank you, Peter, for joining us tonight. We were dropping real knowledge tonight.
Absolutely. Absolutely.
So
it's been a lot of fun.
Yeah. Oh, wait, one more chat. Someone's chatting something. Someone wants to know DSCR, long-term financing. That's like, go ahead, Max. I guess you
Sure,
could
go
say
ahead.
real quick.
So yeah, it's pretty simple. I mean, we'll go down to a 1.1. Obviously, the better your property debt service is, the better of an offer you're going to get. What are the rates now for a person with a 700 plus FICO? So I mean, based on obviously it's going to based off a little bit of the debt service also, so it's not just your FICO score. But I would say anywhere between, right now we're quoting between 5 and 7%.
Great. Yeah, that's reasonable rates,
Absolutely.
And you close very quickly. You don't belabor them with too much paperwork. I mean, there's got to be some paperwork, but you don't kill them, go over the head and ask piecemeal. The worst thing is piecemeal. Oh, yeah, I forgot to ask you for the document. You're already 2 weeks into it already. Gosh.
You know what they say, trust but verify.
Yeah, exactly.
Yes, absolutely.
All right, guys. Thanks so much. And we'll see everyone next time. Everyone have a great weekend. Stay safe. Put your masks on until they tell us differently. And until we see you next time, this is Kevin Clark. Thank you for joining us. Bye, everyone.
Bye, Kevin.
Bye. Thank you, everyone, so much.
Thank you.
And we'll email this to everybody, by the way, with everyone's contact info.
Yep.